Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We've got a lot of things going on today. And first and foremost, we've got today's day one of the Jackson Hole Symposium, but it's not probably the biggest hot zone on the calendar today. Definitely want to keep an eye on the 2 p.m. FOMC meeting minutes, which may not have the same impact since we know 48 hours from now, basically 10 a.m. on Friday, we're going to hear from Jerome Powell. He's going to be the big event for the Jackson Hole Symposium. But as the symposium begins, remember, there is full media coverage of this thing. So different FOMC members are going to be not scheduled, but likely on TV, likely sound bites. And it's going to be a difficult environment to deal with in terms of the uncertainty on the timing of when sound bites might be released. So it's going to be a little difficult. I think the overarching thing, aside from Powell and the FOMC meeting minutes today at 2, is the fact that we are in the lowest, these 2 weeks are the lowest volume environment that we have any year. So the last 2 weeks of August really have become simply what summertime trading has been reduced to. And you'll notice that the volume, and you'll see I've got those volume labels at the bottom of my charts. Most of the year, I'm not too concerned about it. This time of year, it's really pretty palpable. It's pretty tangible that the volume is as low, and markets tend to float around on a breeze. But when there are reasons for people to be paying attention, like the meeting minutes, like Powell on Friday, we'll probably get some sporadic attention. Which direction is that attention going to be in is always the question. So if you've been following along with any of the videos that are posted at the Simpler Trading YouTube channel or my YouTube channel, I remain bullish. Even when we have pullbacks like we had, look, nobody saw the yen carry unwind. So that's not as if we had an event, FOMC or a speech or something that was a timed event that we could then use that as a scheduled, right? What are hot zones? There's scheduled events where we know certain data, certain words could move the treasuries, currencies, indices, metals, energies, etc. This was something that came out of nowhere. And for as much as there was so much made of it, we also know now that not only have we taken out that sell-off, we're now just a smidge above it. So it's not surprising to me if we're going to stall anywhere. Now, a stall is not the same as a sell-off, right? But if we're going to stall anywhere, this would be a really good place to sort of hold a range. And by that, I mean somewhere between, and I'm looking at the S&P futures, somewhere between about 55.70 to the all-time high, which is 57.20. So in that range, I'm not going to be surprised if we just find ourselves bouncing around in that area. Could we pull back? That's the question I keep getting. Rog, I keep hearing we need a pullback. We don't need anything, right? We don't need to pull back. We don't need to make higher highs. We can just continue to meander in the direction of the path of least resistance. Until the yen unwind happened and the panic, you see how it's just kind of slowly stair-stepping higher? There's no reason we can't do that. There's no reason that anything has that significantly shifted since the sell-off that began on the 1st and 2nd of August, which was that compilation of the yen strength plus the US dollar weakness for all the reasons that we've discussed here in Charts and Coffee. All right, so yeah, I'm still pretty bullish, but am I bullish in everything? Am I bullish, quote unquote, the market? I'm not. If we were to sort of shift our attention here to the NASDAQ's starting to print green candles. I'm not bearish the NASDAQ. However, I would love a pullback, but how much of a pullback? Whether that's the S&P or the NAS. I'm going to look for price to come back down to the support of the volatility zone on this chart, and that's in the gray area, and that's all I'm going to look for. I'm not going to look for anything more than that. If I were to calibrate to something that's beyond that, now I'm calibrating to something that's outside the 2/3 probability of what's typically going to happen. So yes, I absolutely optimize for normal. And what does that mean? If we're optimizing for abnormal, we need the rarer event. We need the rarer price action. We need the unusual thing to happen. And I don't in generally believe that's what we usually see, whether that's to the upside or the downside. There are certain events that could trigger that. And that's why we keep an eye on the calendar. If there's going to be an unusual acceleration to the upside or downside, the FOMC minutes could be a reason, could be a catalyst. Same thing goes for 10 a.m. on Friday with Powell. So what would be the reason for it? And if it's a scheduled event, then everyone's watching it, right? And we know that's going to be more attention, more participation. So with that being said, let's jump on over to our first question. Yeah. So Gwen asks, when you're looking at the indices and talking about the previous session close, that's the PSC, by the way, gang. What is your time cutoff for the comparison? Right. Since the ES is practically 24 hours a day. Fantastic question, Gwen. I use the cash close. There is an intensity. So even though gold trades nearly 24 hours a day, NASDAQ, Russell, Dow, crude, treasuries, there is an intensity, there's a focus, there's a concentration of trading that happens between 9:30 and 4 p.m. Eastern. So I use that 4 p.m., what they call the cash close. I use the cash close and I just overlay that. Even though you're right, we're going to keep trading, the S&P is going to keep moving and grooving until 5 p.m. Eastern, I use the cash close. And that I'll use the cash close for gold, for bonds, for crude, for indices and equities mainly. Equities have a pre and post market as well. Low volume, low participation, fewer eyes. So I want to really focus on the psychology that's most concentrated between 9:30 and 4 p.m. Eastern. Thanks for the question. So always the cash session close. All right. And by the way, next week, if you're in Charts and Coffee, you'll see it anyways. Next week, I'm going to share the August trades viz with you all. I think I'll probably have, I don't know that I'll share July, but I'll definitely share August. I'll probably share July as well. What are we doing in the mastery? What's really cool as I look at August right now is our alert to beat the S&P. Because, at the end of the day, if all we needed to do is buy SPY ETFs or calls and just leave it in a very one-dimensional way, we could do that. But the reason we do what we're doing, we study, repair, we trade. The reason we do all that is to be able to beat the benchmark. Otherwise, what are we doing? Yeah. So I'm going to show you how we beat the benchmark in August, how we didn't have massive pullbacks. In fact, we did not experience any losses in terms of big time swings during that pullback because, interestingly enough, going into that event at the end of July, beginning of August, the leading sectors were defensives. And if you take a look at XLP, XLU, you take a look at Coke and some of the positions that we took in the mastery, it's not because I knew what was going to happen. What a ludicrous thing to say. It's because that's where the strength was in the sectors. That's where the attention and the flow was. Now, add healthcare to that, the XLV, that's been extremely persistent in strength. And most recently, we can add things like communications, telecommunications, financials have been coming on pretty strong, and even XLK. So there are certain sectors that are starting to show a little bit more resilience as we bounce from that carry unwind sell-off. The other thing that's really interesting to note, and I've been talking about this as well, so if you are looking at broader participation, one of the things that's really interesting to see since the 7th of August, so when the panic sort of subsided, one of the things that's really interesting to see, it's really cool, is that almost everything, even the lagging sectors like energy and oil services and regional banks and oil and gas explorers, even those meandered higher a little bit. So I don't need a market internal to tell me that we're seeing participation because, frankly, whether or not all the stocks on the NYSE are ticking up or down, or whatever percentage might be, or whether or not S&P names are ticking up and down, that's not as important as a handful of stocks and a handful of sectors. That's what we trade. We trade in a world where a very small number of stocks can dictate the direction of the indices and the sectors, and a very small number of sectors dictate or help the indices move higher, and those are moving higher. XLK moving higher, XLF moving higher. These are really bullish things as long as they can persist. But again, remember, when we step back and look at the next 2 weeks, these are the most illiquid 2 weeks, the most low volume weeks of the year. All right. Next question is CRWD. Earnings are on the 28th. So I have a very specific approach to earnings, Sandhu. One, I only want to trade earnings when a stock has bullish clarity. And this one doesn't. The other one is because I am a buyer of calls and a buyer of puts. The idea here is to be able to take advantage in as far before earnings release as 6 weeks. I want to focus on the rally into earnings. I want to focus on that anticipation into earnings. So one, CRWD doesn't have the structure that I need. And two, it's too close, right? Once I get into 1 week out, I'm not as focused on earnings. I'd rather just let earnings go by and see what CRWD does after that. Now, there's plenty of people that trade earnings. I'm just not one of them. There is a way to trade earnings. It's far higher probability, and that is find trends that in the anticipation of the earnings release, usually as early as 6 weeks out, build a watch list. And between that 4 week and 2 week window, find those pullbacks and take advantage of it. I advocate that people get flat in front of earnings. I do not trade earnings. All right, next up, Ren asks, who is trading the S&P 24/7? Well, it's 23 hours a day, about 5.5 days a week, but I know what you're saying. So who is it? Yes, remember, we live on a big round planet, and somebody somewhere, except for Saturday, but even Sunday evening, somebody somewhere is awake. And when I was trading and teaching a lot of Forex trading, spot currency, I always used to remind the traders that it's dinner time, breakfast time, lunchtime, somewhere in the world, that the sun is shining on some financial center at some point every hour of the day. Sometimes there's more participation, meaning financial centers are overlapping, and sometimes there's less. But remember, a lot of these, especially the indices, the treasuries, the currencies, the energies, they're traded globally. So remember that the new day starts around 8 p.m. every evening. So I'm talking East Coast time. 8 p.m., you've got Auckland, Sydney gearing up. You've got Tokyo gearing up, Hong Kong, Singapore. So every evening, so for example, tonight, Wednesday at 8 p.m., the Asian session is going to be underway. 2 a.m., so this would be 2 a.m. Thursday morning, you've got the European session. 3 a.m., London's opening up. 4 a.m., Asia's closing. By 7 a.m., you'll start to see the volume rise in the U.S. So it's always just the sun somewhere shining on some financial center. And, most of these indices and commodities traded the way they are, not that 9:30 to 4 little anemic schedule. Someone somewhere has something to think about them and will trade it. Is it as actively traded as it would be, say, between 9:30 and 4? No, but there's a good bit of attention and trading happening, as we would say, pre-market. But I actually don't like that word because it tends to omit the fact that, it's pre-market for you and me. It's not pre-market for somebody else. It's their trading day. So that is what we're looking at there. Question on crude oil. I typically look at the full-size contract of CL, and I don't know if that's a question, or I don't quite understand the question, Dugan. But yeah, what I would say on crude, if I'm looking at crude right now, it's super important that crude finds support somewhere between 72.5 and 71.70, 71.60 on the daily time frame. And if we can find support in that area, that would be what I'd be looking at. Okay. All right. Next up is, let's see here, gang. Next question is, Kim asks, would love to see what you were doing in the mastery the last couple of months. Thinking of joining. Yeah, I'll share with you all the trades viz, Kim, at the end of probably next week. And, is August a super active month? Typically, the second half won't be. The first half, I pretty much made my month. We closed out 4 or 5 swing winners that week. And knowing that the next 2 weeks in August, meaning the weeks that we're in right now, are very illiquid, I have optimized for, hey, I'm not going to sling a bunch of contracts. I'm not going to sling a bunch of trades this time of year, needing these 2 weeks. But yeah, absolutely. I'll be happy to share that with you. And it's not just the swing trading that we do in the mastery. A lot of you know that I've been sharing a lot about what we're doing with the S&P. And a lot of folks have, not a lot, a handful. Most folks are extremely excited that I'm at least looking at SPX, and that's cool. But I don't look at SPX any differently than I would look at SPY, that I would look at ES futures, which I love to trade. I've been a futures trader for 3+ decades. I was trading futures. Some of you might remember. I'm going to go back memory lane. Remember when there was no ES? Remember when there was only the big SP contract and you'd have to pick up the phone and put in your order because they'd have to route the order to the big pit? Yeah. So I'm a huge fan of futures, but I do not advocate new traders start there. It ends in blood and tears. But there is a way to gear up for futures. And for me, the best way to do it is not even the micro futures necessarily, with the SPY puts and calls. So we do a lot of different types of S&P trading. SPX just happens to be sort of the last version of the S&P that I'm considering. So we do day trading, we do swing trading. Our position portfolio is up very, very nicely. So we tackle a lot of time frames because we compartmentalize, right? And we don't optimize to trade all day long, right? All trading hours of the day are not equal. So we try to optimize for different time frames and time horizons. So we can be day traders for about an hour a day. We can focus on some swings for about an hour a day. And then when we do have those weekly setups, like we're long Mondelez, we're long McDonald's, we're long Pepsi, and I'm sure I'm forgetting a few that we've set up the last 2 or 3 months. So we really try to tackle all the different types of trading opportunities that us retail traders have access to. It's a really exciting time to be a trader. I know that things might be sometimes tougher depending on price action, but never before has the retail trader been empowered with more information and more access and more liquidity. And that to me is pretty darn exciting. All right, next up is, let's see here. Do I like the crude oil long here? No, I don't. Maybe short term. Maybe Dugan, maybe as a day trade today, maybe a swing on a 1 hour, but not likely. So only day trades right now on crude. I'll be leaving it alone longer term. Yeah. All right. GE. Not yet. I'm not near enough a level that I can do anything with, Eddie. And that's a distinctly different thing that I do, which is I wake up every morning saying, look, there's a lot of things I want to do. I might be bullish, I might be bearish. That's not the same as buying or shorting, but I'll have a directional bias that I favor. But until price gets specifically to the level, to the zone that I know that I have a repeating statistical edge at, right? Until it gets there, I'm very content remembering that flat is a position. All right, next up, I've been in and out of Uber, okay? Heavily weighted stock in industrials and transports, by the way, gang. The past few weeks, gonna take a look and give me your opinion on Uber's trend or lack of thereof. Great question. Uber does not have a trend, but it doesn't mean that it's not bullish. And there's a couple things we can do. One, the color of the candles are the most revealing. So as of the 8th, the only thing that I really want to do with Uber is what you can see is happening infrequently, but close enough. Since the 8th, so that's what, 2 weeks now? Since the 8th, we've had 2 opportunities at the daily price movement range, or very close to. So I would continue to be bullish. I would not be a bear. Would not be a short seller or long put. I would continue to look at the long side. Okay. Danny asks, I was a member last year. Is my hourly price movement range still valid? It is not. Danny, we just actually put out an update on the HPMRs day before yesterday. These are updated based on the current, the volatility that we're using. They have to be kept current. Yeah, they have to be kept current. All right, gang, I am out of time. Thank you as always for all the questions. Mark, you mentioned that you have the HPMRs. Yeah. So, Mark, the really basic thing is, yeah, if you want to come into the mastery, we use them every day, right? A lot of the alerts are based on them. What I would tell you, Mark, the best place to start with understanding, Rag, I've got this indicator. You tell me it's amazing. What do I do with it? 3 steps. You ready, Mark? First step, find your relative outperformers. We talk about that almost every day here in the room to some degree. Yeah. Number 2, find those setups where you want to buy into support or short into resistance. If you want to buy into support, it should be an uptrend, right? So that's where finding the trend, identifying the trend really is everyone's priority. Once you know you want to be a buyer, hourly price movement ranges and daily price movement ranges, by the way, are simply support and resistance. So use them like you would any other support and resistance tool. Okay. All right. So that's a wrap, gang. I'll see you tomorrow, same time, same station. Be good to each other.